Peter and Isaac. Same age, same income, same city, same $100,000 sitting in the bank. Peter looks at houses. Isaac opens an investing app. They both think they're making the smarter move. They're both about to learn it's not that simple. First year. Peter uses his $100K as a 20% down payment on a $500,000 rental property. It's a clean duplex, good area, nothing fancy. He takes out a 30-year mortgage at 7%. Monthly payment? Around $2,660. He rents both units for a total of $3,600 a month. On paper, that's about $940 a month profit. Peter smiles. This looks easy. Isaac takes the same $100K and puts it into a total stock market index fund. No leverage, no tenants, no property. He sets up an automatic investment of $500 a month. Then he closes the app. On day one, Peter has a property, tenants, and something to show. Isaac has a number on a screen. It doesn't even feel close. Year two. Peter is loving it. Rent comes in every month. He drives past his building and thinks, I own that. But then a tenant calls at 11:30 p.m., leaking pipe. Repair cost, $900. Insurance, $2,000 a year. Property tax, $5,000 a year. That $940 profit, it's shrinking, fast. Isaac checks his account. $100K to about $121K. He shrugs. It doesn't feel like much. No one asks him about it. No one is impressed. Year three. Peter's numbers look good until you look closer. Over 3 years, rent collected $129,600. Mortgage paid $95,760. Sounds great until you subtract taxes $15,000, insurance $6,000, repairs $5,000 plus, 1 month vacancy negative $3,600, random fixes, cleaning, relisting. Real profit? Closer to $5K to $10K total. And that doesn't include his time. Isaac. Initial $100K. Contributions $18K. Portfolio $155K to $185K. He's done nothing. Literally nothing. Peter feels busy and productive. Isaac feels like nothing is happening. Year 5. Peter replaces the roof. Cost $12,000. No warning, no delay. Just gone. He raises rent slightly, now making $3,900 a month, but costs rise too. His profit is still thin. Isaac, total invested $130K. Portfolio $185K to $200,000. Still boring, still quiet. But something is changing. Growth is starting to accelerate. Year 10. Peter's property is now worth around $670,000 to $720,000. Mortgage left $330,000. Equity roughly $350,000 to $390,000. That's real wealth, but it came with years of tenant turnover, repairs, stress, hundreds of hours of work. Isaac, total invested $160,000. Portfolio $260,000 to $300,000. No debt, no stress, no midnight calls, just steady growth. At this point, Peter might be slightly ahead, but he worked for it. Isaac waited for it. Year 20. Peter's property. Value $900,000 to $1 million. Mortgage nearly paid off. Equity $750,000 to $900,000. Cash flow? After 20 years of maintenance, vacancies, renovations, he's likely netted around $80,000 to $150,000 total profit from rent. Isaac, total invested $220,000. Portfolio $600,000 to $750,000. No effort increase, no extra work, just time. At this point, Peter has a powerful asset. Isaac has momentum. Year 25. Peter owns the property outright now. No mortgage. Rent $5,500 a month. That's real income. But new HVAC, $9,000. ongoing maintenance, still managing tenants. It's a business, not passive. Issac, total invested $250,000. Portfolio, $900,000 to $1.1 million. No effort increase, no extra work, just time. Year 30. Peter, property value $1.2 million to $1.4 million. Total rent profit after all costs, $150,000 to $250,000. Total wealth, roughly $1.3 million to $1.6 million. He built it through leverage, effort, risk, and time. Issac, total invested $280,000. Portfolio $1.3 million to $1.7 million. No leverage, no stress, no tenants, just compounding. So who won? On paper, they're surprisingly close. But zoom out. Peter took leverage, worked for decades, faced unpredictable costs, held one concentrated asset. Issac stayed liquid, stayed diversified, took market volatility, did almost nothing. The part nobody talks about. Real estate feels better. You can see it, touch it, talk about it. Stocks feel invisible until they aren't. Real estate rewards effort, skill, leverage. Index funds reward patience, consistency, time. The truth. Peter didn't make a bad decision. Issac didn't make a better one. They just chose different trade-offs. One chose control. The other chose freedom. And the real question isn't which one makes more money. It's which life do you want to live for the next 30 years?